and creditworthiness. It's so different in China as opposed to how creditworthiness is seen outside of China.
Yeah, a lot more scrutiny overseas when they, selling bonds overseas and the ratings that they get from the S&P and the like in the West. And I'll get into those reasons in just a bit. I want to bring up a few examples of these companies, these Chinese developers. And this is all coming into light as Kaisa and its default woes emerge on its offshore debt, and how a lot of companies are returning to the domestic bond market to raise funds. And look at the different ratings from overseas versus domestic. Evergrande Real Estate, of the 20 top developers tracked by Bloomberg, Evergrande is the most indebted developer in China. It has a B+ rating overseas. Basically, it sold $805 million of 5-year bonds in Shanghai last week at 5.38%, compared with 12% on similar maturity U.S. dollar notes that it sold in February. So there's the, its financing costs are a lot higher in the United States on its offshore debt than it is. Can we go back to that previous page? Thank you. I would just want to touch on Evergrande a little bit more. There we go. At home, it gets a AAA rating, so that's why that payment coupon is much lower. Gemdale, BB rating. This, by the way, B+, 4 grades below investment grade. BB on Gemdale, it's AAA in China. Poly Real Estate, China Vanke, BB+ overseas, AAA domestically. So there is a big, big discrepancy.
Why is this happening?
There are many different reasons. Let me list them. China is different, obviously. Whereas in the West, the S&Ps and the like, the Fitch, they will look at credit worthiness. Forget what happened, of course, when they gave the highest ratings in 2008, 2007, before the subprime crisis happened, to a number of companies that were backed by subprime mortgages. That's another story. But what's happening in China is oftentimes they'll get a higher rating because of relationships with the government, better guarantees, and that they sold bonds. The issuers were tied to the government. So oftentimes they could either roll things over, they could be bailouts, and not a single China developer bond issuance has defaulted. Domestic
that may be true, but S&P, Moody's, and Fitch also take that into account.
Absolutely.
Okay, so then what else?
So there are accounting differences, too. I want to bring up Kaisa. Kaisa booked some debts as advanced deposits to make its balance sheet appear stronger. This is a common practice, and I won't get into all the different accounting discrepancies as well at home versus abroad and how they view them. The biggest one, perhaps, is that the rating agencies themselves, Dagong, Lianhe, and Chengxin, are the 3 big Chinese ratings agencies,
yes.
Okay? But in 2009, after the subprime meltdown in the United States, global financial crisis, China wanted to stimulate growth. So a number of smaller ratings agencies mushroomed to support the local municipalities as they had to sell bonds for their financing, but they had to sell it off balance sheet on local government financing vehicles. So all these small ratings agencies at the municipal level set up to rate those bonds that were being issued. And there was some favoritism going on. One company, Henan Xinxie Credit Rating Agency, established in 2012, 5 analysts, not a big one. It has never rated an issuer below A, okay? Not one. They admitted, they face huge pressure from issuers, because what's happening, they've admitted to us that if they don't give a higher rating, the issuer will just go to another of these small ratings agencies and they'll abandon them and get a better rating.
But what's the perception? Do people think they're going to get guarantees with AAA ratings? Because that's not the case.
Again, the pursuit of lowering their financing costs is critical for these developers, which are highly indebted and struggling right now.